Hi everyone, this is Junbei Liu, your portfolio manager for Alpha Plus Fund. Welcome to May Monthly Update. We had a great month. Now, some of the things we've been saying is now playing out ever since the war started. Even though we haven't had resolution in terms of the war and then the Strait of Hormuz, but the market is now looking through. Market is now finding companies that continue to have those structural tailwinds and wanting to buy those sectors. And these are the names like the resources, like the copper names, as we have been saying, they all had an incredible month for May. But on the other hand, the uncertainty caused by the war is now impacting some of our domestic economies, where our inflation was high to start with, and now with the oil price shock has really caused a real slowdown in the domestic economy. Some of the cyclical names, housing related, continue to be under pressure. So this is really a month where you see big bifurcation in terms of sector performance. Now your portfolio has positioned rightly for this. Let's talk through some of the stocks that have contributed positively. There's no surprise, our copper names has done very, very well. Number one will be the BHP, world's largest copper producer. Share price performed incredibly well since it's first sold off in March. Now, our view is that with the demand and the electrification in data center, the electrification of the world, the AI demand, we think the copper is well supported and there's a lot more room to go. And other names like Samphire, being the pure copper play, continue to perform very well for us. But it's also interesting in the month that lots of our top performers actually come from our short positions or underweight positions as well, given this is the confession season in May. We had CSL has come through with, again, another tough earnings update. And our view is it's still not over. The company is still looking for a permanent management, and unfortunately, the market condition just got tougher for this business. That has been a big contributor for the return for the month. The next one is ASX, another short position and have been for some time, just delivered another downgrade. Cost needs to go higher, and revenue is not able to offset some of those weaknesses. Now, we think this business is going through its transition, and then unfortunately, the next year is going to be the rebase or the transition year. That means the earning is not yet recovering. While we're on the roll, Dexus is the next one that has been the big contributor for the month as well. Now, this one has been our short position for quite some time. Not only our short thesis in the office space has been playing out, the company itself has really struggled internally with a number of its funds. And this month, it just lost the court case with one of its airport assets, and potentially it will be forced to sell its interest in that asset. Now, there's one more winner I want to talk about. It's a smaller cap company. Now, this company actually has come on our radar a few months before. It sits in the novated lease, and that's Smart Group. Now, novated leasing sector has been under a bit of pressure in the last 12 months as the government was rumored to be changing some of its support for the fringe benefit tax for EVs. Given what oil shock has done to the economy, the government has now came through giving more clarity about their support for the EV space in the novated leasing. The government has extended its support and also have slower phasing out and give a lot more certainty to this sector. Company was very cheap when we first researched into it before the budget, and then with our understanding and then given the valuation opportunity, we took a position. And since the budget, the share price has performed incredibly well, even though it's a small position, but it has showed up in our top 5 attribution for the month. Now, on the other side, there are a couple of stock names that hasn't done as well as we had hoped. First one is Brambles. Now, Bramble did have a downgrade, But the reason being that there is a bit of a supply chain a congestion, and given the Soccer World Cup coming up, there is increasing number of increased demand in the US by their customers, and the company aren't able to move their pallets fast enough into some of their customers, and that has caused some of the slowdown in terms of earnings expectations. We still view this company as very, very defensive, continue to deliver good free cash flow growth, and it's one of our core bottom drawer holdings. And the next one that hasn't done quite well is actually AP Eagers. Now, we like this business, and particularly given its exposure to the BYD brand here in Australia. AP Eagers still represents over 70% of BYD sale into Australia, which has been incredibly strong. Now, I think previously we talked about the demand for EVs through the roof. Now, AP Eagers is one of the purest exposure to that space. Now, they had their own issues as well for the month. That's why share price was down, is because they just couldn't deliver fast enough of the sales that they have already made. Now, the company has updated saying, look, the sale is coming through. They already made the sale, and then it will be delivered in the next 3 months. And our view is that the market has become a little bit too short term. So to us, this is one of the probably one of the best discretionary stock at this stage. That's it for this update, and thank you for listening. Thank you for being investors of Alpha Plus Fund.